The third leg will be in place, in my opinion, when you see that US megabanks begin to own Bitcoin. The Microsoft treasurer might then decide, I believe we should buy some Bitcoin upon waking up in the morning. It seems like the books are in order, according to the CFO. The SEC has endorsed this, and there are 34 ETFs with $70 billion of Bitcoin, the general counsel and attorneys would argue. I suppose it may be considered a valid asset. The treasurer might then instruct the individual at Citibank or JP Morgan to purchase $1 billion and end the conversation. It was with great pride that Michael Saylor, founder and executive chairman of MicroStrategy, said earlier this year at the Bitcoin Pride Conference in June and the Bitcoin Atlantis Conference in Madeira that Bitcoin has entered a 10-year gold rush era to protect themselves from the debasement of fiat currency. Multi-trillion-dollar companies like Apple and Microsoft, according to Saylor, will invest in the dominant digital asset. He claims that following the U.S. Securities and Exchange Commission's announcement in January, the Bitcoin gold rush started. Thousands of institutional investors now have access to the market cap leader in cryptocurrencies as the SEC approves a Bitcoin ETF with multiple spots. According to Saylor, thousands of hedge funds will keep this period going until 2034. Whether purchasing Bitcoin outright or investing in it through spot Bitcoin ETF, pension funds, sovereign wealth funds, country states, even corporations like MicroStrategy. He stresses that the regulatory landscape for cryptocurrencies has changed dramatically with the licensing of these ETFs, putting an end to the myth that Bitcoin is either magic money or a means of laundering dirty money. The involvement of prominent Wall Street firms like Fidelity and BlackRock further solidifies Bitcoin's status as an investment opportunity with the potential to endure rather than just a fad. Saylor thinks that when authorities authorize banks to hold Bitcoin, the last piece will fit into place during this gold rush moment. He thinks this will make Bitcoin accessible to all types of investors, which will cause its market cap to skyrocket, maybe reaching hundreds of trillions of dollars very quickly. During a recent interview with Bitcoin News, the famously bullish billionaire business tycoon predicted that the market cap of the top cryptocurrency will reach $1.1 trillion. Is the slow adoption of this Bitcoin treasury strategy by major firms surprising to you? I must admit, I am somewhat taken aback. The moment you get your hands on Bitcoin, the thought immediately crosses your mind, I need to acquire as much as I can before someone else takes it all away. I remember thinking, oh no, I need to get in on this quick before someone figures it out and the price goes up by a factor of 10. When I first started buying Bitcoin in 2020, I should probably acquire it before it's 10 times more expensive. When something finally makes sense, that's a normal reaction. Why are you asking this? Who among us wouldn't want to buy $1 billion worth of Bitcoin, sell it the next day, and pocket the difference? Simply put, why wouldn't they aim to earn $1 billion? Say 5, 5 or 10 billion or any sum of money. I mean, Bitcoin, it's like the limitless money glitch in its early days, isn't it? However, in reality, everything follows the same old patterns, behaviors, rituals, and ceremonies. Also, institutions and businesses are slowed down by several conservative influences. Over the past 4 years, one concern has been whether or not regulators will accept Bitcoin. Not until January of 2024 was the question adequately addressed. So the fact that Bitcoin spot ETFs were greenlit by the US SEC is a huge stamp of approval that this is real institutional-grade digital asset and commodity and not a tulip bulb or a fraud. That was a crucial aspect then. The implementation of fair value accounting was another prerequisite for its widespread use by corporations. An investor would see a gain of $1 million if they invested $1 million in Apple shares and those shares were to double in value. Even if Bitcoin doubled in value, the previous indefinite and tangible accounting would likely have you displaying a loss if you had invested $1 million in the cryptocurrency. So a disinterested chief financial officer may say something like, hold on, I can buy this and if it doubles, I'll make money. Even if I buy it and it doubles in value, it will still appear that I lost money. In my opinion, that was an antagonistic and biased report. That has changed this year, though. Thirdly, for Bitcoin to be widely used by institutions, the world's financial system must begin to hold Bitcoin as collateral. This is standard procedure at Google, for example. If I were Google and I made $1 billion every month or even every week, I could easily instruct a junior employee to wire that money to JP Morgan or Citigroup so that it could be used to purchase government T-bills. Imagine, nevertheless, that I wanted to purchase 1 billion Bitcoins. Neither JP Morgan nor Goldman Sachs nor Bank of America nor Wells Fargo will accept the wire transfer. A new connection is something I need to seek out. A new vendor needs to be set up. Many of these businesses kept the same bank for 20 or even 30 years. Citibank was formerly known as National City Bank. The Rockefeller Bank was National City Bank. That bank belonged to John D. Rockefeller. The oil corporations probably have a century-long history of banking with the same institution. We accomplished it prior to those things. So far, the ETFs have served as a crucial safety valve in this procedure. In the US, the new accounting standards have served as a second green light. Begin holding Bitcoin. The next step is to attach the third leg to the stool. In that case, Microsoft's treasurer may decide to purchase Bitcoin the moment they open their eyes in the morning. All right, I suppose the accounting seems fine, the CFO would remark. Oh, the SEC's endorsed this, the attorneys and general counsel would state, and there are 34 businesses that actually own something. The treasurer might then instruct the individual at Citibank or JP Morgan to purchase $1 billion and end the conversation. You see, it's simply incredibly stress-free. And we aren't quite there yet. And that is the drawback. Resolving the financial issue will likely take another year or two. There's no doubt that will happen, but it will take some time. Meanwhile, there is a chance for these businesses you mentioned to gain an advantage, and if you're an early adopter, it's the same as what someone who purchased Bitcoin in 2013 went through in 2017. Meaning you'll get paid more, but you'll also be working more. I used to tell people that when something is easy and doesn't cause any controversy, everyone will want it. No one will look down on you if you buy it, but you probably won't have the money for it. Imagine being able to purchase just 1% of what you could currently. So you'll have to shell out cash for ease of use later on, or you can put in some extra effort now and get a discount from the market. The digital currency years of 2024 to 2034. Wouldn't you agree that the years 2024 to 2034 for AI constitute the truly disruptive high-growth years? In this, the digital capital era, people often ask, is that the store or the currency? I say capital. Because people confuse the two concepts. Could it be a medium of exchange or a means of storing value? If I had to choose one thing that will impact the world right now, it would be the emergence of Bitcoin as a store of value. The value of digital capital, its value is in the hundreds of trillions of dollars. It's quite valuable. Also, that's a trend that's driving people crazy. Businesses and other organizations are expanding at a rate 1 or 2 orders of magnitude faster than in the past. And that will keep going strong for the 10 years to come. The Bitcoin gold rush culminated in that. I mean, by 2035, all of the Bitcoin will have been mined, so it's like a gold rush. At the moment, there are natural sellers. You can buy 450 Bitcoin each day from anyone who wants to sell it to you, and when that supply runs out, the only option to acquire Bitcoin is to artificially inflate its price and bribe sellers who are unwilling to part with their cryptocurrency, with a significant spike in cost. Now that Bitcoin has the support of both institutions and regulators, as well as banks eager to get in on the action, it's like a gold rush. A few have already managed to get in. This week, the biggest Brazilian bank was in the news. As a matter of fact, Banco Itaú, the biggest bank in South America, has declared that its clients can purchase, sell, and store Bitcoin with the bank. Picture this: JP Morgan announced that they will allow all of their customers to purchase, sell, and store Bitcoin on their platform. So that was the situation in Brazil.